Welcome to This Explainer. We're going to build your first real trading playbook. We're cutting through all the noise, all the confusing indicators, and we are going to focus on the one core skill that separates professional, planned trading from just amateur guessing.
You ever just stare at a chart, completely overwhelmed, asking yourself, should I buy? Should I sell? What is even happening right now? Yeah, you're not alone. We're about to cut right through that frustration and give you a clear map to navigate the market.
You know, the single biggest hurdle for any new trader is not having a clear, repeatable reason to get into a trade or get out of one. And that uncertainty, it leads to emotional decisions. And emotional decisions, well, they lead to losses. We're here to fix that, starting right now. So many people are out there looking for some magic indicator that's just going to tell them what to do. But the real secret isn't a secret at all. It's about learning to read the battlefield of the market, that constant struggle between buyers and sellers that actually creates a pretty predictable structure. Okay, let's get to the absolute foundation of your entire trading strategy. We're going to focus on the two most critical levels you'll ever find on a chart. Support, which is the market's floor, and resistance, which is its ceiling. If you can understand these, you're on your way to understanding the market. Think of support as a literal floor. When a price falls down to this level, a whole crowd of buyers steps in. They're all thinking, hey, this is a great price, I'm buying. And their combined demand, all that buying pressure, is strong enough to stop the fall and push the price right back up. It's a zone of value. And you guessed it, if support is the floor, resistance is the ceiling. As the price climbs up to this level, sellers start thinking, you know what, this is a fantastic place to take some profits. They start selling, and all that supply overwhelms the buyers, pushing the price back down. It's like a psychological barrier. You know, this really simplifies the entire dynamic of the market, doesn't it? At support, buyers are in control. At resistance, sellers take over. Your job as a trader isn't to predict the future, it's to identify where these battle lines are and trade accordingly.
Theory is one thing, but seeing it on a real chart, that's what makes it click. So let's take a look at a stock that I know many of us follow very closely, Reliance Industries, and see how these floors and ceilings actually play out in the real world.
Okay, so imagine you're looking at the Reliance chart. You notice that every time the price drops down near 2,800 rupees, it finds buyers and it bounces. That's your floor. That's your support. And then every time it rallies up towards, say, 2,950, it just stalls out and pulls back. That's your ceiling. That's your resistance.
All right, now that you can actually spot these levels, let's turn that knowledge into action. We're going to build your very first trading playbook, and it's built around two simple yet incredibly powerful strategies based entirely on support and resistance.
This first one is the classic, the most fundamental approach. When a stock is moving predictably between a clear floor and a clear ceiling, you trade within that range. It's really straightforward. You just aim to buy low, near the floor, and sell high, near the ceiling. So here's the step-by-step plan. First, you find that clear range. Second, you enter your buy order when the price comes down and tests that support level. Third, you set your profit target just below the resistance, don't get greedy. And finally, the most important step of all, set a stop loss just below that support level. This is your safety net. It protects your capital if the floor breaks. But here's the thing, the market doesn't stay in a range forever. A breakout is that explosive move that happens when the price finally gets enough strength to smash right through the resistance ceiling. And let me tell you, these can be some of the most profitable trades, if you know what to look for. Now, listen up, because this is a critical lesson that will save new traders a lot of money. Not every move above resistance is a real breakout. Many of them are fakeouts, and they're designed to trap eager buyers. Your job is to learn the difference between a genuine power move and a trap. To confirm a real breakout, you need two pieces of evidence. First, the price action. You want to see a long, strong green candlestick that closes decisively above that resistance line. Second, and this is non-negotiable, you check the trading volume. You have to see a massive spike in volume. That spike tells you there's real conviction and institutional money behind that move. Think of this step-by-step process as your trading discipline. You wait for a candle to close above resistance, you demand that volume confirmation, and by doing so, you drastically reduce your odds of getting caught in a fakeout. And remember this key principle, that old resistance ceiling very often becomes the new support floor. Let's apply this right back to our Reliance example. The resistance was 2,950.
You see the price push to 2,955, and you see a huge volume spike confirming it. You enter your buy order there. Your safety net, your stop loss, goes right below the old ceiling at 2,945. Your plan is to ride the new momentum towards a new target. See? This is planned, strategic trading.
And here's the truth. Having a great strategy is only half the battle. Without discipline and a professional mindset, even the best strategy in the world will fail. This next part is what truly separates the consistent traders from the gamblers. This famous saying, it's not just a clever line. It is the core philosophy of every successful trader. Your primary job isn't to make money, it's to protect the money you already have so you can stay in the game long enough to be profitable. Stop loss is not a sign of weakness. It's a business tool. It's you deciding upfront exactly how much you are willing to risk on one single idea. It takes the emotion completely out of a losing trade and protects you from a catastrophic loss. Every single trade must have one, period. So this is your homework. Make this checklist a daily habit. Pull up a chart of the Nifty or your favorite stocks and just go through these steps. The goal is to train your eyes to see the market structure instantly. This daily practice is what builds the skill and the confidence to act decisively when a real opportunity shows up. What we've covered today is really more than just a technique. It's a fundamental shift in how you view the market. By identifying support and resistance, you can finally move from reacting emotionally to trading with a clear, logical plan. The map is in your hands now.